Hey guys, so welcome back to the sixth weekly call. Two left after this one. We're getting there, getting into the trading model, getting over the file stuff you need for it. So let's get straight into it. I'm Ollie.
And I'm Jamie.
So it's currently Friday, 28th of October. Hope you all had a good week in the markets. Yeah, make sure you take some notes, guys. Big call this one, important one. Big part of the strategy in this one. So yeah, I share the screen. All right, here we go. So today we're going over imbalance and balance zone, and then we might go into why time's so important, following on to the next call, going into the times of Forex and the indices. But we'll see what the time's looking like. So first of all, let's show you some examples here. So on EU Weekly here, so let's use the fib. This one here, guys. So basically, so what you're looking for here, we're not using fib how you'd normally use it. So normally you'd use fib, draw it from. I'll show you an example of how you'd normally use it. A lot of people get confused with this. So you normally use a fib, and there's more levels than just the three I have on. That's all you need. So a lot of people would draw it, I'm pretty sure, from the high. I can't even remember really because I don't use it this way. But I'm pretty sure they do from the high to the low. And then they'd be looking for it to come up to some of the levels and stuff like that as targets. But yeah, we don't use it like that. So what an imbalance is, it's essentially a gap which hasn't been traded into, and it needs to be traded back up into. So you can look at it as a level like your supports and resistance. This is what we look for, where we look for these levels. We don't look at support and resistance. Useless. Only thing they're useful for is to know they're going to get taken out. So here, so let me explain. So we have this down candle in here. This is the one we're focusing on. And then we have this wick to the side and this wick to the right. So they're the two wicks we're looking at, and then this big bearish candle in here. So what you do, let me do this again so you guys can watch closely. You'll get your fib. You'll, from this wick, draw this on and extend it down to that wick here. Then you extend it out obviously to where price went. And then as you can see, price has come down, keeps going, hasn't filled back up yet. And then eventually it's came back up. We've hit the 50%, played off of that. Kept playing off, it came down again. It's came back up with 50% again, reacted off of it. So you can see how it's reacting off it just already. And then it's came back up. We've now hit 100%. So this is very nice reaction, what we'd like to see. And then from there, it drops, and then we take the low and then keep going after that. So you can see how it plays off them. I'll get a few more examples after this, guys, but it's crazy. So what we look for, we on the fib, we use the 150%. We want, sometimes it can tap into it and we can look for movement. But if you want a safer entry, we look for the 50% and the 100 to tag. And then if we're looking for, this isn't just the model, like we're going over this at the end, but if you're just using an imbalance, say, and you want an example of how to enter it, you'd enter just at 100% here on this one. And you could have got a really nice entry on this. You'd have had the stop above the 100%, so you could have had a crazy stop here. And then, personally, for a target, you target a low. And as you can see, that would be, yeah, it'd be crazy. That'd be a 1 to 14. You could have a tire. But yeah, that's just base of how you'd enter. And then, like I can show, this is any time frame as well, guys. This will work on any time frame. So there's a good example here, and I'll show you why in a second. So we have this one in here. This is a good example because you guys will be able to see why. So what you got to understand. Oh, it's not quite on. Right. What's it in? Right. So that wick there, that one there, and then we're looking at this downward candle there. So impulse could be sort of like really small. It's just a gap in between the two where price hasn't been filled back up to yet. So, or down. It can be for a buy or sell, either way. But we're very bearish on EU right now, so a lot of them we're looking for sales from on the higher time frame anyway. So this one's a good example because you're probably thinking, oh well, it came up to it, it came past it all the way past 100%, but no, this it closed below, and if we go down time frame, you'll probably be able to see on a lower time frame, it respects it and closes below the 100 on a lower time frame as well. But on this, you can see it has closed below the 100%, so which still makes it valid. If it closed above the 100%, that would then make it invalid, and we wouldn't look for an entry on that because it has gone past it. And as you can see, it has closed below it, and then it's dropped again. And this is the weekly time frame, so these pips we're looking at are a lot of some big moves here. I'll show you another time frame in a minute, but you can just see it, guys, how it just goes every one. And if you're looking for day trade, intraday, any day, it's on all of them. Again, here we have very nice example again. So we have this big bearish candle here, this wick to the left, this wick to the right. Extend it out to where price is. Obviously, you do this before it plays out. So if you was to ignore that, that's what the price looks like right now. You draw the fib from there to there. And obviously, when it comes back up to it, which it does, you would look for an entry there. This isn't obviously, like I said, not all you're going to be using, but if you was just trading this, for example. So you can see, like I said, taps the 100% reactor for a bit, and then you can, if you got an entry in there, that'd be fine. Depends how tight your fingers actually, but that's allows you to have a very tight stop again. Then this candle comes back up to it and closes below, which is fine. So even if we entered after that candle close on the week for the next week, that'd be good. And then down we come, take out that low. Very nice move again. And let's try find some buyers really quick. We'll go on a smaller time frame as well. Let's go an hour. Right. Should be some, right, yeah, here we go. Straight away. Right, so hour. So this is for buy. So we're going to risk to a wick here with this candle and that wick there. So extend that out there. Right, so in this case, hit 50%, and so if you want, and then you can see, so we have that wick there, this big bullish candle, and this wick here. Draw it from there, send it out. Price then comes down, tags the 50%, and then we're up. We take the high, and we rally from there. We keep going. So you can just see how it does play out, guys, very well. And if you actually, 1 second, I've just found something. But yeah, again, for an entry on this, what you can do, so 50%, if you want to be safe, take it to a high, keep it running, maybe put break even at that high if you are bullish, and again, below the 100%, and there you go. That's how you do that. And then if you really did want to, but yeah, you should be fine because the stop's below. So 50% is a good place to get in as well if you want to be a 50% trader. And then if I actually go onto this, guys, now, I'll just use this one. So you can actually see this playing out now. So it don't matter how long ago they are either. That's another thing. We have this one now about to come down into it, as you can see. So pricing back here, it hasn't came back down into this one yet. So personally, and me and Jay are personally bullish on the dollar. We think these lows are going to get taken. So what you can also use them for is a target as well. So you can know that hasn't been filled yet. So knowing this in here, this is all an area of gap. This hasn't been filled. So already you know that this should be taken, this 50% at least, and then possibly should be the 100 as well. And a little tip for you guys, so it's currently Friday. I'll throw this in there right now. Don't think we've gone over this. When there's a low like this on a Friday, or a high even, so obvious lower highs, like there. So we have this one in here. So this could be a nice little trade straight away now, just knowing this little tip. What you can see up in here from there, where it is now, Fridays don't normally leave lows like that intact or high intact. So you should see this by the end of the day, by 10 p.m. UK time when market closes. That low should be taken in there, and we'll probably maybe even see the 50% get taken today before. But yeah, that's a little tip for you guys, a little extra. That's yeah, probably put that in the chat as well. To be fair, not gone over that before. Friday, don't leave lows and highs intact if they're near it. Obvious lows and highs, but yeah, I think that's it. Do you guys all understand that fine? Let's just see if anyone. Or do you want me to go over anything else before Jamie goes into balance zones? Just say in the chat, guys, if you want anything else. What's the wait? What? I can't see the chat. Right, what's going on here? One sec, guys.
Yeah, we can't seem to see the chat for some reason.
What's going on?
It's not letting us see the chat.
One sec, guys. Oh, there we go. Fine. Do you have a tip on how to determine the daily bias? We have gone over it in the previous call, haven't we?
Yes, we've gone over weekly profiles.
Yeah, we've gone over in a previous call. So if you ever look back, we have gone over the weekly profiles. Yeah, but anyway, you can see this coming down now, guys. And like I said, if I just draw this out from where I said it from about there. Oh shit. I'll do an update of this later, guys, just so you can see. It's just just for example, yeah, you see this low get taken. That's something I can see happening by the end of today. It might not push down this far, but yeah, it's definitely take a low, 100%, guys. Hope you guys all got that. Important stuff in that, what I've just said. So I'll hand it over to Jamie to go over balance zones.
All right, guys, let's get into it. So balance zones are imbalances, but what they are is they're very strong levels of imbalances. So they're imbalances where you can trust them a little bit more. So let me just go back. So in here. So this is a balance zone. So what makes a balance zone? So Ollie's just gone over imbalance. So you got, this wick's high, it runs up, and you got this wick's low. So this in here is an imbalance. And then you see to the immediate right of it, we have another imbalance in here. So from this wick's high to this wick's low, we've got this big down candle. This is another imbalance. So we have two imbalances next to each other. So if I draw this out, these levels of imbalances they're stronger than the average imbalance because you have two. When you have two next to each other, that is when they are stronger than the average, just an imbalance on its own. Now you can see here, we react from the 50% level in here. We touch it again here. Again, note the time that this happened. We'll go over this in the next call. And then you can see again here, we come up 100% fill of the imbalance. Again, note the time that this happened. And then look at the sharp drop, taking out the sell side liquidity below here. So you can see that in here, these imbalances. And I'll get another one, another example up for you guys as well. So we have one in here as well. So again, we have this wick's low, this big down candle, and then this wick's high. So this in here is an imbalance. And then if you look to the immediate right of it, again, this wick's high, this wick's low, and we have this big imbalance in here as well. So I'll draw that out for you. And as you can see, it comes down. The bodies are respecting the 50%. That's what we want to see. And then you can see on this wick here, on this candle when it opens, it opens, it wicks down to the high of it, and then it rallies from there. So these levels from the top of it, the middle of it, and the low of it, they're very important levels. And just because it's left the imbalance, it doesn't mean that these levels aren't then important. So when we leave the imbalance in here, you can see, you know, the high of the imbalance was still very important. So you could take a trade like that if you want to be. That's if you're more of a conservative trader. So what we're looking for is we're looking for two imbalances next to each other, just like this. So you guys now know how to find imbalances. When you find imbalances like this, where they're both next to each other and it's trading down into it, then that would be a really good opportunity because you're expecting these levels to be strong because this is a balanced zone. When it's down here and down here, they're balanced. They're balancing out. We have sell side here and then we have buy side here. So they're balancing out each other. So it should act as a strong level, a strong area in the market. And I'll show you another example on the dollar. This one's on the daily time frame. So again, this works on any time frame. Again, it can work on the 1 minute, it can work on the daily. And it was back here. So again, we have this imbalance just in here, and then we have another imbalance right here. So there's no price in between it. You don't want to see that where. So let's say, for example, this imbalance formed, and then it came up, and it was messing around in this area, and then it come down and whatever, and then it created this. Then this wouldn't be a balanced zone. You don't want there to be any price action in this area. Want to be just a clean imbalance, and then directly to the right of it, another clean imbalance as well. Nothing in the middle of it. If there was price in the middle here, then that would not be a balanced zone. And as you can see, we come down 100% fill, and then we rally from there. It comes back to it again, and you can see, look how it's acting as real support and resistance. So these are the real supports and resistance of the markets. It's not just highs and lows. That's not what we're looking at for support and resistance, or just what everyone else looks at. We're looking at these levels in here as the true support and resistance, and you can see they act really well. And then obviously from there the dollar just rallied. So do you guys understand that? Does that all make sense to you guys? Let me see if I can get the chat up. No, again, the chat's not working. I have to go like that. Yeah, that makes sense. Okay, awesome. Someone just said about the cancellation of the signals. Yeah, you've been cancelled, Andreas. It's all been done. All right, guys, so you understand that. Okay, perfect. So in the next call, me and Ollie are going to go over the times for Forex and indices as well. So there are certain times of the day where the algorithm that we like to teach, it generally plays out certain macros, which are a set of instructions, a certain thing. And it does this at certain times of the day. So we're going to teach you about that. And we're also going to give you a little time when the algorithm likes to run very quickly. There's a time, and this is for indices. And generally, this happens almost every single day. There's a time where the algorithm will start moving the indices really quickly to try and get to a specific level. And you'll see some good moves in that time. So what I want you guys to do is try and find these imbalances and then look at the times where it trades into these imbalances and try and determine, like log what time it trades into it, and do that for Forex, and then do that for indices as well. And just look at where, when it's trading to it, what time it's trading to it, and you want to note that as well. And then in the next call, so that will be on Wednesday, we'll go over the times for the Forex, where you want to be looking for it, the times for the indices, where you want to be looking for it as well. And we'll also go over the bond market as well a little bit. So I don't know if you guys want to trade the bond market, but it's just there, if you guys ever do want to get into it, it's up to you. I think most of you guys are Forex traders and indice traders, but we'll just give you that as well. Just because why not? It's more information for you guys. But yeah, so that is everything for this call. I hope that made sense and you got everything. Now, obviously, go into the charts and study it as well. We did actually get some nice responses in the Discord around the impulse blocks. So that was good to see. Yeah, it's good to see that you guys are actually going into the charts looking for the stuff that we're teaching you, because that is really going to separate, the successful traders to the non-successful ones. The people who just watch these calls and then just forget about it or whatever, or they, we've had a couple of people who have gone through the mentorship and then they sent a chart in and it's nothing that we've taught. It's just kind of like, why watch the calls if you're not going to use anything we teach you? Because this is gold. Like, this is literally everything that you need to quit your job and trade full time. Like, this is literally everything. We're basically handing you guys an ATM machine. You just have to do the work to go into the charts and look at what we're teaching you. And it's that experience factor that we can't give you. Only you can get that yourself. So yeah, digging in. That's what you've got to do. You've got to dig into the charts and you've got to look for this stuff. Because this is the stuff that's going to set you free, guys. Like, this is the stuff that will make you, that will give you that freedom in life that you all want. So I hope you guys enjoyed. I'm looking forward to teaching you guys the model as well in the last call, something where you can actually go into the market and actually use it. So that'll be exciting. So it's not far away now, guys. But yeah, that's everything for this call.
Have a great weekend, guys. Yeah, I hope you've enjoyed it, as Jamie said. And yeah, we're looking forward to teaching the model next week.
See you guys.
Peace.